the probability for a large-scale regional war engulfing the Middle East has gotten much, much higher over the past 24 hours. We'll talk about what's going on over there and what it's going to mean for markets. But to give you a preview of what this will likely mean for markets, and I won't keep you in suspense, it means a lot more debt, a lot more money creation, a lot more inflation moving forward. As we're watching this play out across the Middle East, the price of gold is surging to record all-time highs. You can see that right now, gold futures contracts on the COMEX trading for $2,472. Now, this day right here, that is July 16th. That represents the previous all-time high close of gold at 2467. So if we close the market right now, gold would be closing at a record all-time high price. Now, despite this fact, premiums on physical metal remain incredibly low. I'm smacking my gold and silver around here, but there's a lot of complacency in these markets right now, but that could change very quickly should this conflict escalate. Now, it's already escalated dramatically over the past 24 hours. We've witnessed 2 airstrikes by Israel taking out top leadership of Hamas and Hezbollah. Notably, there was a strike in Beirut which killed a top Hezbollah commander just within the past 24 hours, I believe. And more recently, and this is the big one, the de facto leader of Hamas, top Hamas leader, top political leadership in Hamas, killed in Tehran. He was visiting the Iranian capital for the inauguration of their new president. And you may recall the previous one died under somewhat mysterious circumstances in a helicopter crash just a couple months ago. But now this guy has been killed via what is being referred to as an airstrike or a drone strike in the capital of Tehran. So this is very embarrassing, one, for the Iranians to have a top ally killed in their capital city. All of their security precautions, which I'm sure were in place, completely failing. And Israel acting perhaps on inside intelligence, perhaps on intelligence garnered via the U.S. I mean, who knows? But they were able to take this guy out. Now, why is that such a big deal? Well, one, I mean, it obviously raises the risk of a conflict directly with Iran. Let's just take a look at the timeline here. So, Israeli Prime Minister Netanyahu just wrapped up a visit to the U.S. What was he discussing with all of the top political leadership in the U.S.? Likely getting us prepared for a war with Iran. Now, I'm going to take a break here real quick and go to the chat. Someone says that gold prices surging to a new record high is not true. Well, I mean, that's just math, my friend. For anybody who thinks that that's just clickbait, again, gold is right now above the previous record all-time high close. And this is going to continue as this conflict escalates. The price of just about everything, all commodities, safe haven assets, they're going to go through the roof. And since I'm pausing, getting aside from this timeline real quick, I'll take the moment to say, silver remains incredibly undervalued. To get an idea of, the fact that silver and other hard assets remain incredibly undervalued. SD Bullion, look at this sale right now. 1 ounce Engelhard silver bars on sale for $5 over spot. That is, that is an incredibly low premium on vintage bars. Okay, there may be some confusion. I see people saying that gold is trading at $24.40. Well, look, when you're looking at the spot price, the way that this is typically reported is you look at the futures contract that is trading at the highest volume. And right now, I believe that is the December contract. That is why COMEX futures are being reported at 24.73. So the current months may be lower, but you got to understand whatever the most liquid futures contract is, That's the one that's going to be reported as the spot price. It's not necessarily the current months. And right now, that's December, which is trading at record all-time highs. So, yeah, I know there can be confusion about the spot price. Remember, it's not really the price of physical metal anyway. But anyway, let's get back to this timeline. So, Benjamin Netanyahu was visiting the U.S., meeting with all the top political elites, the leadership. What was he getting ready for? Well, my theory is that he's getting ready for war with Iran, getting green lighted, getting everything, all his ducks in a row. Why now? Well, they're probably trying to kick this conflict off before the elections. If Donald Trump gets into office, that might make this a little bit more difficult. He tends to have a slightly less interventionist foreign policy than the current administration. So the timing is right between now and November for this war to kick off. And the assassination of the top Hamas leadership, which just occurred, that means that the negotiations for peace, I mean, good luck, right? That's the guy who the negotiations were going through. So now the possibility for some kind of a peace deal has diminished significantly. Now, while Benjamin Netanyahu, the Israeli prime minister, was in the U.S., there was an attack on a soccer field, I believe, in the Golan Heights. So it was Syrian residents of the Golan Heights, children were killed. Now, this is being highlighted as a casus belli for, major escalation. Now we see top Hezbollah commander assassinated via an airstrike. We see the top Hamas leadership assassinated via an airstrike in the Iranian capital of Tehran. What do we expect Iran to do here? They've got to respond somehow. They are, of course, at it with the fiery rhetoric. They're vowing a harsh response, according to the most recent reports. But what does that mean? Well, there's a lot of things Iran could do here. I think that Iran probably doesn't want this to turn into a full-blown conflict, but there is only so much antagonism that they can bear before they lose credibility on the world stage. And of course, this type of brinksmanship is incredibly dangerous, that there could be a miscalculation. Something could not work out exactly like the planners are trying to orchestrate. And so the risk for conflict, couldn't be higher. That's why gold is surging today. Of course, there's also the Federal Reserve, which will be conducting its meeting later this afternoon. In fact, in about 30 minutes, they're going to be letting us know what's going on with interest rates. So, certainly, if a war does break out, keep in mind, they're going to need to do a lot more than just cut interest rates. But that is coming. This economy is falling apart. Commercial real estate's in a huge crisis, regional banks in a huge crisis, consumers at the end of their rope. Interest rates are simply too high for the debt-addicted economy. Now, they need to be higher to really fight inflation, but that is not in the cards. The inflation fight will be sacrificed to bail out this economy, and the war, which we are likely on the verge of, is going to mean massive deficits, huge amounts of spending. If you think the war in Ukraine and the U.S. support for the war in Gaza on behalf of Israel thus far, if you think that's been expensive to the tune of billions, hundreds of billions of dollars, that is nothing compared to what lies ahead should this conflict escalate. And again, the path to peace has been almost, effectively destroyed following this killing of the top Hamas leadership, because who are they going to negotiate with now? You also have to keep in mind that Iran is going to have to pick a response here. They're going to have to decide whether to perhaps launch airstrikes, to perhaps do something via their proxies. But that's could be a real game changer, and it's a real risk for escalation, is that even if Iran decides to temper their response to this escalation and say they don't launch a full-scale airstrike, or maybe they do like they did last time and they tip off the Israelis and the Americans first, and they launch, missiles and drones that can get easily shot down and intercepted, try to save some face that way. There's no guarantee that the Iranian proxies in the region, that would be Hezbollah, that being Shiite militias in Iraq, that being in some ways the Houthis, there's no guarantee that they will decide to measure their response in the same way, right? So this could get away from Iran. And I think that, the West does seem to, or at least elements within the West seem to really want a war with Iran. Certainly we've seen elements of the military-industrial complex within the United States, within political leadership, clamoring for this. Lindsey Graham wanted to strike Iranian critical oil infrastructure following October 7th. He may get his ultimate desire. Let's see, we got a super chat here. Thank you, Christopher McCormick. Says war is a must to bail the Keynesian experiment out. Well, yeah, yes, sir. That is exactly right. They need to cut rates and they need to massively expand the deficits and the debt because the way this works, this is an exponential game. They can't just borrow at the same rate, and you can see that when you look at a chart of the U.S. debt, which now is over $35 trillion. We've got more than $200 trillion in unfunded liabilities. This stuff has to grow at an exponential rate. It's a Ponzi scheme, right? So you need to constantly be taking in new money to pay for the existing program, right? And you can see the U.S. debt clock, we just surpassed $35 trillion, but that number is going much, much higher. And yeah, it's like, what does Gerald Slente say? When everything fails, they take you to war. And that's what's happening right now. We are being taken to war because they need desperately to pump more money into this system. Oil. Let's talk about oil. Oil surging today, up almost 4%. But look at the price of WTI crude, $77.64. I mean, the Middle East is about to explode into a major conflict. I mean, the signs of that are everywhere. But why is crude oil only $77? I mean, it seems like it should be much higher. So there's two explanations, if you ask me. One is just complacency on the part of markets and investors, not acknowledging how serious this risk is. And that's possible because, what we've witnessed since October 7th is just a gradual ratcheting up of this conflict. And I mean, people have very short attention spans these days. They expect everything to play out immediately, but a sense of complacency has been developing here. And I think a lot of people think, well, the Middle East is always in conflict. This is no different than any of the other myriad crises we've witnessed over the past several decades. But the difference is that right now we are in a fourth turning. The world itself is on the verge of a major war. I mean, you have hotspots all over the place in Africa, in East Asia, in the South China Sea, in the Korean Peninsula, in Ukraine, in Europe there. I mean, there's tons of unrest around the world right now. Look at what's happening in Venezuela. I mean, Venezuela, basically what's happening right now is you have a socialist dictator on one hand trying to maintain power by probably rigging the election. I mean, I don't know. I wasn't there, right? But at the same time, I mean, the opposition is being cultivated by the West, by the Americans. So it's not like there's necessarily good guys in this case. I mean, the real people suffering there are the people in Venezuela. But the point is, unrest is growing around the world. I mean, in the U.S., we very, very narrowly recently avoided what I think would have sent us plummeting into a civil war with the failed assassination of Donald Trump. I mean, anybody who thinks that that would have played out in any way other than major civil unrest in the U.S., I think is, living in fantasy land. But so you've got the, normalcy bias that could be keeping a lid on the price of crude oil. But also, there's the fact that the global economy is so much, more weak, so much weaker than the political elites are letting on. I mean, everybody tells us, oh, it's the strongest economy in history. Janet Yellen tells us the banking system, it's well capitalized, it's strong. The Fed tells us that inflation is down and growth is up and we have a strong jobs market and everything's great. They've just managed everything perfectly. But the reality is that we are living in the biggest bubble, literally in human history, the debt bubble. $90 trillion in debt for global, governments. In the U.S. alone, $200 trillion plus in unfunded liabilities that we're on the hook for. And the whole system is massively addicted to new money creation and massive expansion of debt. That is how we have gotten, the quote unquote prosperity that we currently enjoy. The problem is that is all built on lies, right? It's all built on borrowing. It's all built on central planning, and it works until it doesn't. And that is why the Fed is going to be setting the stage for more easy money at today's FOMC meeting, and it is also likely why we are being taken to war. This should give you an idea of where we're at. This is the Fed balance sheet here from the Federal Reserve itself, and I mean, look, I mean, you have a massive spike up in the financial crisis of 2008, a whole decade of QE inflating an enormous bubble in just about everything. You've got the pandemic, huge spike up, trillions of dollars created out of nowhere. Then more years of constant QE, reinflating some of the biggest asset bubbles in history. Now it's come down a little bit. I mean, you had some QT. Of course, there's that little spike there. What was that? That was the regional banks almost completely failing. And the creation of the Bank Term Funding Program, the expansion of the Fed balance sheet in light of the emergency. What do you think is going to happen when we have a financial crisis, a debt implosion, and global war all at the same time? You think this is going to keep coming down? Or do you think there's going to be a lot more money created? I mean, you let me know. I think I've got energy saving settings on my tablet turned on right now. That's why it keeps going dark. Sorry about that. But really, I mean, what do you think is going to happen to this when this all plays out? Obviously, there's going to be huge money creation like we haven't seen before. I mean, look at the trend. A big spike, a much bigger spike. What's the next one going to look like? It's going to be tens of trillions of dollars potentially created out of nowhere. I mean, at the very least, the 35 trillion that we have in debt, it's unpayable. I mean, nobody even seems to dispute that. The fact that the current levels of debt are completely unpayable. And do me a favor, we're at 196, 200 people actually in the live stream, 54 likes. Go ahead and smash that like button if you find this information useful. If you enjoy these videos, it's one of the best things you can do to support the channel. I really appreciate it. And also, let me know in the chat where you think this is headed next. You think the balance sheet is coming down? Put a 1 in the chat if you think this is going lower. Put a 2 if you think this is going to absolutely explode as we watch just a huge glut of money creation and borrowing unfold before our very eyes. PG UK in the chat says $1.1 trillion in interest payments on something that was created out of thin air. Yeah, that's a very good point. It's another reason why the stage is being set today for lower interest rates and for cuts by the Federal Reserve. I don't think Powell is going to cut today. I don't think we're going to get like a surprise rate cut. But what I do think we are going to get is at the press conference. And again, I don't know what's going to come out of the mouth of Jerome Powell. I don't pretend to have any insight into that. But it seems to me he's going to need to wax pretty dovish here. I mean, we just had a major correction in the stock market. The stock market has been on this huge blowout rally for AI, AI, semiconductors, all this stuff. I don't think that's going to stop anytime soon, but that's because the Fed is going to be pumping more money into this system. And I mean, really, you got to understand the stock market and the economy, they're not the same thing, but politicians love to conflate them because one thing that politicians can do with all of their massive borrowing and their expansion of the money supply and their deficits is they can inflate huge asset bubbles. I mean, this is what has happened in the NASDAQ, though, over the past month. A huge takedown. Now it's starting to rebound today. You know why? Because they know that Powell is getting ready to turn the printing presses back on. And I think Powell understands we got an election coming up. If he doesn't give the market what it wants, we are going to see a huge downturn. Things have become so rickety. I mean, this whole thing is built on a foundation of lies, basically, that we have a strong economy, yet, manufacturing is cratering, unemployment is rising, the number of job openings is coming down. Yesterday, we got the job openings numbers, which, came out better than expected. Why? Because there's a huge increase in government job openings. I mean, you can't get more transparent with the manipulation and the lies than what we're seeing. I mean, they've gotten so bold with it. They just do it right under your nose, and they don't care because most people eat this stuff up, and that is unfortunate. But, I know that probably most of the people watching this channel don't fall into that category. I hope you don't, at least. I know a lot of you. I mean, I read the comments, I read the chat. I know a lot of people We don't agree on everything, but you understand that most of what comes out of the mainstream and the political elites it's not there to, inform you, right? It's there to control the masses. And that's why they're going to keep telling you that everything is fine right up until the major collapse, right? And, when that happens, that's when you're going to want physical assets, tangible gold and silver. I got this Aztec round out today because, look, we are on the verge of a major war unfolding before our eyes. I think the path to peace has been greatly diminished in the past 24 hours. And, I like this one because it has sort of some apocalyptic connotations, which I think are appropriate for the times we're living through. But, the world's not going to end, assuming we don't descend into a nuclear holocaust. I don't think that the political elites want that necessarily. But what they do want is more control, and they want more money being funneled up to the highest tiers of society. And a war is a great way to do that, unfortunately. The war, people love hearing the war drums beat. They love putting, flag stickers on their vehicles when we go to war. They love the idea that, we're dropping smart bombs on them for some reason. It's all very strange to me, but that is, a hallmark of our society. And it's not by accident, right? I mean, it's intentional. You're very heavily propagandized society. That's not going to change anytime soon. And unfortunately, there's a lot of uncertainty right now around what's going to come in the economy. But one thing that we can count on, I think, is that there's going to be more conflict, more money creation, more debt, more borrowing, and more inflation. And right now, I mentioned earlier in the live stream, there's a lot of complacency right now among investors, among the general public. And one way that you can tell that there is complacency is because premiums on physical assets are so low right now. You've got, junk silver trading maybe 3 or 4% over spot. I haven't looked today, but yesterday it was a little under 3% over spot. You've got pre-1933 gold, slabbed and graded coins trading for 5 or 6% over the gold spot price. That's not what you witness when people are getting ready for a crisis. I mean, the smart money is bidding up the price of gold, but that's happening in paper markets. Retail investors, unfortunately, I think they're getting, ready to get fleeced. Part of it is that they're so pressured by the levels of inflation that exist, but that's not going anywhere. So, look, if you're being forced to sell your gold and silver right now to keep up with the skyrocketing cost of living, I really do sympathize with you. I think it's very important to figure out a way to have some cash on hand, to be a strong hand, to not have to liquidate your physical metals right now. Because I'm telling you, I know gold is at a record high. Silver is up today big time as well. Silver's knocking on $29 last time I looked, but now is not the time to be liquidating physical metals. Like, it's not financial advice. I'm not telling you what to do. Everybody's situation is different. Maybe some people need to, and I totally understand. But I think that, for those who can manage it, who can wing it, who are watching this and have been stacking for a long time, I think it's the time to be a strong hand. I'm increasing positions to physical metal right now. I'm still stacking, even though the price of gold and silver are up, because one thing, premiums are down. When that is happening, that means that other people are selling their physical metal. And I like to be a contrarian, take the other side of that trade and buy what others are selling. And in light of what is occurring, now is the time to do that. Again, look, I'm going to just look at the updated chart. I know a lot of people said, it's clickbait. Gold's not at record all-time high. Well, this is TradingView. This is the gold futures on the COMEX. It's probably the December contract. I'm not sure which contract is being looked at right now, but whichever one it is, it's the one that's most liquid and most traded right now. So that's the real price of gold, paper gold, that is. 2471, which is above the record all-time high close. Now, we're going to have to look and see what happens when Powell opens his mouth in just a few minutes, because markets are going to be hanging on every word of this central banker. It's the only thing really driving price action in these markets right now. But you know why that is? It's because when you have a central bank creating money out of nowhere, manipulating interest rates, printing huge sums of money, monetizing debt, that really does affect the price of everything. I mean, it is what has gotten us to this point where everything, including assets, is so much more expensive. Also, the cost of food has gone up dramatically because of it, and that's not going to change. So, you need to be preparing for this right now. That doesn't just mean getting physical, tangible assets, although I do think that that is a critical element of getting prepared for what is coming. But understand, a lot of people, I think, have this kind of euphoria that my 401k is up, paper assets are up. Maybe the candidate I like is going to get elected in November. And I think that there's a fairly diverse audience here. I don't really pick sides, and I know that maybe some people are more vocal than others, but whoever wins in November, more debt, more borrowing, more inflation is basically guaranteed. I mean, if Trump gets elected, let's say, he's already told us that a weak dollar is his favored policy because that's going to help rejuvenate U.S. manufacturing. That may be true. He's also talked about putting a 60% tariff on imported Chinese goods. So if you think that's going to be good for inflation, at least in the short run, there's no way it's going to kick off a massive trade war. UBS said that that could result in a 50% reduction in China's growth rate. So that's going to lead to a global economic crisis, quite possibly. And then, I mean, look, if Harris gets in there, I don't know how that's going to happen. There's certainly a huge campaign, it seems like, to promote her. But the war in Ukraine will become intractable. It'll last forever. It'll be a forever war. The mess that is Bidenomics will probably just get much, much worse. But again, the thing that matters is that the debt and deficits and the fiat money creation, it's not in question. Neither party says that that's a problem, and that is the real problem. I mean, I remember I was watching the congressional testimony of Jerome Powell a couple weeks ago, and it was like everybody had a theory for why inflation is so high and why the cost of living is so high and why the economy is so bad. It ranged from corporate greed to Joe Biden himself to everything but the real problem. And all those elected political elites sitting there questioning Jerome Powell, they are the ones who have created this situation. All they need to do is look in a mirror to understand what the real cause is, because they all signed the multi-trillion-dollar spending packages that have necessitated massive debt monetization on the part of the Federal Reserve. Many of them were, rah-rah cheering for war over the past 2 decades. Look how that turned out. Basically, we went a couple $1 trillion more in debt, and we gave the Taliban a bunch of weapons. I mean, that is essentially what the result of that was. And yet at the time, this is incredibly important for regional security in the Middle East and the security of the U.S. And now look what the situation is like in the Middle East. I mean, are we better off for it? Of course not. But what are we going to do? More interventionism, more spending, more warfare. And it's going to have the same result. I mean, 20 years from now, we're going to be looking at, today as the good old days. I mean, if the fiat dollar even exists in 2 decades, I think is more up for debate than any time in the dollar's history. And keep in mind, the dollar, remember, it used to be gold. I mean, this is literally a $20 gold coin, right? I mean, this is what dollars used to be. It wasn't like today where they mint a silver eagle and they put a $1 face value on it. I mean, that's just like tradition. Nobody's out there spending that, but these used to actually circulate. Dollars used to be gold, but since 1971, they haven't been. Why did they have to take the dollar off of the gold standard and end the convertibility into gold via the Bretton Woods Agreement? Well, it was because of massive warfare, the Vietnam War, interventionist foreign policy, socialist policies at home, the Great Society of Lyndon B. Johnson, which has just done nothing but create more stratification, more poverty. But that's the game plan, right? I mean, it's to get everybody beholden to the leadership, to the system, so that you, give up your liberty, you give up your independence, and everybody on both sides is clamoring for more of this stuff. So where do you think it's going to go? But that being the case, the fact that gold and silver especially, is on sale right now. I mean, all of this is playing out, and silver is under $30. Previous 2011 all-time high of $50. You adjust that for inflation, I think it's around $70 or so. That's using the official inflation numbers. If you use the real numbers from, say, Shadow Stats or something like that, you're looking at a much higher number. But think about the 1980 high. That was a silver squeeze of sorts. You had the Hunt brothers getting in there trying to corner the market. Now they got squashed by the paper markets and by the rules changing. But there's a real possibility that that might not work the next time. So, people will say, you can't use that $50 target from 1980. Well, look, gold was hitting an all time high back in 1980 as well. There was no Hunt brothers there. That was also because of geopolitical crisis. The Soviets had invaded Afghanistan. There was massive inflation. There were rate hikes. Of course, Paul Volcker back then was able to fight inflation by hiking rates because the U.S. debt was, I think, around $1 trillion in 1980, 1979. Now it's 35 trillion, and we have far more unfunded liabilities, and we're running the biggest deficits in history. So, they can't fight inflation that way anymore. What we're headed for is not a repeat of 1980. It's more likely a repeat of the entire 1970s when you saw gold run from $35 an ounce all the way up to $850. And you saw silver run from, I don't even remember what the silver price was. If somebody knows what it was in 1971, let me know. I mean, in 1964, though, we know that you could get, silver for its face value. Basically, it was the coinage, but it ran all the way up to $50 in 1980. And we're very likely at the early stages of a similar environment, a stagflationary environment. The Middle East is about to kick off a major crisis. The price of oil is spiking up. Earlier we were talking about the price of oil spiking up. You haven't seen anything yet. One of the possible responses that Iran may have to this conflict, of course, is shutting down the Strait of Hormuz. That's sort of a card they haven't played yet. But if they do that, it doesn't matter how slow the global economy is going to get. You got to understand that for something like oil, there is an inelastic supply, or rather, an inelastic demand. Like there is a certain amount of oil which just has to be consumed to keep the lights on and to keep things running around the world. And something like 20% of global oil production transits the Strait of Hormuz there by Iran every single day. So when you cut off the supply of 20% of global oil, then you're going to do a lot more than spike the price by 20%. You understand? Because there are people who simply have to have oil at any price. Doesn't matter how high it goes, and they're going to bid the price up to unimaginable levels if that takes place. Look, now here we are at the live stream. Oil up 4% today. Still incredibly cheap. You might consider, look, not financial advice, but you might look at, some assets that benefit from higher energy prices as a way to potentially hedge yourself in some way against the coming increase in the cost of living, because the price of oil has a huge impact on just about everything. And if it spikes up to say $150, $200 because of the closure of the Strait of Hormuz, you're going to see an economic slowdown accompanied by massive inflation, the likes of which probably nobody alive has ever seen. I mean, maybe historically there's some precedent for it, but not in living memory, I don't think. So again, do what you can to get prepared, do what you can to get independent of systems of support. Julia Stryker in the chat here says, going to fill my gas tanks and extra gas cans after the live stream. Well, yeah, I mean, it never hurts to just, keep your gas tanks topped off because you very well could see a situation with rationing, with shortages. I mean, we're not there yet, but well, I mean, we'll see. Jeff Nelson says they'll switch to solar. If the world switches to solar first, you kind of need petroleum to, have the energy inputs to get the solar going. But I mean, if that happens, if you think they're going to make up the difference with solar, then silver is going to absolutely explode. Keep in mind that last year, China installed more solar capacity than the U.S. has total. Now there's some talk of oversupply in the Chinese solar market, so I don't know if that's going to continue at the pace. I mean, I don't even think it's possible to continue at that pace indefinitely because they installed so much solar there. It's more than we have completely in this country, what total that we've ever installed. They did that in 1 year. But there is going to be a lot of industrial demand moving forward for silver, and that will increase more so. The higher petroleum goes, certainly, because solar will become more and more of a viable alternative. Hate hypocrisy in the chat. I'm kind of going more to the chat here now because we're sort of done with the live stream, but you always have good comments here. He says the silver shortage is a scam. Well, look, the silver shortage, in the sense that there's a deficit, is real. Obviously, there's not a shortage because premiums are very low, but there is a deficit every year for the past 4 years. I think last year it was about 180 million ounces of silver. They got consumed by industry that didn't get replaced by mining and recycling. And this year it's forecast to increase to about 250 million ounces. So, I mean, that's obviously unsustainable, right? You can only do that for so long. And sure, there are billions of ounces around, in the form of bullion, et cetera. But the price is going to have to go a lot higher for many to sell that. I know I'm not selling mine at the current price. So that's at least one strong hand out there. But I know a lot of you are sort of in the same camp. I mean, basically hodling your silver. And I think that that's probably wise, at least with a core position. Um, you want to flip your silver, just go buy the SLV or the PSLV or something like that. I mean, when you buy physical metal, you're kind of in it for the long haul. But I think that's a good plan because honestly, the way things are shaping up as we head towards war and massively expanded debts and deficits, there is the propensity for a massive financial crisis, a debt crisis. A war in the Middle East could expand far beyond the Middle East. You got to keep that in mind. You could see this accelerate to involve China, Russia, the BRICS nations, of which Iran is a member, by the way. I know that's not a military alliance, it's more of an economic union, but still, the battle lines have kind of been drawn here. And so, economic warfare, fifth generational warfare, China decides that it's just at risk of sanctions, which we know the Biden administration is cooking up right now on Chinese banks. They could just dump their U.S. Treasury holdings and trigger a massive financial crisis overnight if they wanted to. And there's, when you have $35 trillion in debt and $200 trillion in unfunded liabilities, and you're in the business of borrowing more than $2 trillion a year, you sort of by default have a sword of Damocles hanging over your head at any given moment because you make yourself vulnerable to these foreign holders of U.S. debt. They hold about $8 trillion worth of U.S. treasuries. If they ever decide to dump those, well, I mean, that could immediately lead to spiking interest rates, which are already hurting things. And it's not like the Fed can't deal with that, right? It's just how do they deal with it? They buy up all the debt and they monetize it like a third world banana republic, and then you get massive inflation. So the propensity or the possibility of us heading towards massive inflation and hyperinflation, it's not guaranteed, certainly, but it's, I think, higher than any time in my memory, certainly much higher than a couple of years ago. And honestly, in the past 24 hours, it's increased because we're heading towards a war. But look, this is a long live stream. I'm going to end it here. Thank you very much for watching. It's 2 o'clock, so I guess we've gotten an interest rate decision. I haven't looked that up yet, but I'm going to go watch that press conference with Jerome Powell. Maybe we'll talk again later or tomorrow. But stay safe, everybody. Happy stacking. Leave me a comment down below to let me know what you think about all the topics we covered today. Do me a favor, if you're still watching, smash that like button. I think this must have been of some value to you if you stuck around this long. So please like the video, support the channel, and I will catch you next time. Smart Silver Stacker, out.